to see everybody again this month. Certainly what we're thinking about now is seasonality. And there's a lot of factors that go in play. Just certain times of the year, certain things happen, certain cycles happen. Sometimes are good for the market. Some have a historical rough spot. And we're certainly in that point now. Typically, when we get into August, September, and part of October is when the market typically has some tough times. Jeff Hirsch of the Stock Market Almanac does a lot of work on that and shows that there are some times where frequently you could just be out. It's the sell in May and go away, and then you buy again in October. That's a very rough period. Not always, but you have to keep in mind that the market doesn't always go up in there, and the odds of it going up in this period are very low. So you kind of have to be very careful or quick to be defensive, depending on what's going on. So going into our regular stuff, last month we were right about there. We were peaking on. I said the market was stretched a little bit, but it did continue to go up. Money still piled in, but right around the first, we did peak, and then it's been kind of slowly pulling out. The trend is still pretty positive. This is our long-term look of things. For the last couple of years, it's just been back and forth. We really didn't know is there enough in there, but now we're doing pretty well. The money's coming in enough, and any pullbacks or things that we would look at buying into instead of selling on the peaks. And again, with right around the first of the month, money flow went negative on our midterm, so we start to go defensive right away on that. Certainly in our index models. And in our other models, we'll start to pull out of things that are whatever's weak in the model. We'll start doing that. But yeah, as about the first, this is money flow coming out really there, and it's still accelerating. It's still not doing great, even though today was up earlier. It's given back some, so we'll have to see where that goes. And note that spot, and then the last, as I was saying, on the chart of the S&P, right about there, that's where the money flow went negative, and big surprise, the market went down. I don't know how long this is going to be. We had talked here about. I thought that the 20th was the peak. It may have been the first of the month, but that might be the peak for a few weeks. I don't know if we're going to actually get back up there and in the near future. Now, I think it's very possible because of back to seasonality. When you have the third year of the presidential cycle and it goes so well in the first half, there usually is a break right now. And then once we get into October, there's usually a really good run up into the end of the year. So we're thinking about that at the moment. So I'm not surprised to see this go down, maybe even sideways for a bit, and not much to happen in there. But see how going back to the first slide, I was saying money flow had been good, or the trend has been positive for quite some time, and then that's been true. But interesting to go back to the peak of March of 2022, we just went right there and stopped. And I think it's really interesting. Before things went lower there, I don't know if we're in that situation now. I would be more expecting to see it come back down to about where this happened, or maybe where this happened, right, as the new bottom, and then we continue up and have a really good end of the year. So it's not a time to be too aggressive. You want to be a little bit safer. When you dive into the sectors, it's very mixed, but the MACDs are negative on just about everything except for energy. But even when I'll show you the rotation chart next, it's coming down too. And this is what we've been wanting to see, is everything moving together again, where it's been very all over the place. This last run up really. What was positive one day was not the next. It was a very mixed bag of where the strength was in the market, and now it's acting more normal again, and that's nice to see. And certainly the materials are good if energy is. Communications, I'm not exactly sure why that was doing well, because things like Apple got hit hard this week with their earnings, and that they were down maybe 10-15%. So I would expect that to pull the tech side of things down quite a bit. But then conversely, Amazon had great earnings, and they were up a ton on the same day. It was fascinating. But that is more in here, which makes no sense because they're in the negative. So who knows? We're mixed, but we've got more negatives coming in. I expect to see the positive sectors shift over to the negative sectors, including energy, even though it is positive. 29 days positive in the last few years has been a long time. So once we hit about that 20 to 30-ish days of positive, it tends to start rolling over. I'm watching for that. Here's my favorite, watching the ducks swim around the pond. Last month, these were all bunched in here and they were going all different directions, but now we're seeing everything kind of pushed down and to the left. And that means that is the lagging box versus T-bills, right? So the strength of the market sectors versus what's considered the risk-free rate is buying T-bills. It's just weakening across the board. And that's kind of what we expected to see. I really expected to see this last month, but it just kind of got stuck and bouncing between weakening and leading, right? It was stuck here, but now we're seeing everything come together down here. But what's great is we could see this happen for maybe 2-3 weeks. As I was showing you, we could come down a little bit further in the market, but then once these all start pushing up into improving and even up into the right, then we're like, okay, it's game on again. It's time to really get after it. But at the moment, it's time to play it safe. Don't get too aggressive. There's just no reason to. The money's not, our money flow is not coming in. The sectors are all weakening. It's time to, seasonality plays into it. There's really not a lot of reason to be too aggressive at the moment. Let's also look at the S&P versus the NASDAQ. This is something we use in our market neutral strategy. I know there are some people that watch this live every month that this would more apply to. So when the S&P is beating the NASDAQ, that would be this trend is going down. And that would, last year, most things were down until the end of the year. And then it went up pretty good because tech was leading. And tech usually leads in a good environment. But when we get these switches back and forth, it might be turning off. So we had this back in April, where it was messy, not the best. And then tech took off again and it was really good. Really for the past almost 2 months, not much has happened. It's just been back and forth, which is fine, but you don't make much progress when you're in that situation. But now we're switching to S&P. So if we do get a sell-off, it's expected that the NASDAQ will fall harder, and being short the NASDAQ, long the S&P, which is how this sets us up for, should actually do okay, which is a very odd concept to think about, but that's what we find works very, very well when things get choppy and questionable. And lastly, I want to show you the seasonality. I think this is just fascinating. Optima has great data on this, and I'm going to try to show this stuff more often. Typically, this is every day of September and the average of what has happened in the S&P since 1950. So that's 73 years of data. I think that's pretty interesting. And today is a pretty high probability of being negative, although I think last I saw we were up a little bit. We were up a lot earlier, and now we're not up so much. And typically that lasts until about the 16th, about the middle of the month, and then things could get better. Notwithstanding the little blips here and there of high probability negative days, but we get pretty good. And then we get into September. Actually, the first half is usually pretty good, and the sell-off that we're used to seeing in that September happens in the second half. So we may turn up sooner than later. I'd be curious to see what the rotation does, but that is where we are right now. But this is super interesting to think about. This has been acting like clockwork. Like this, the sell-off started at the first. We had a couple. I think this was even an up day on the 7th, and then we had more of a sell-off. So I'm curious to see how these next few days play out. Historically, they should be negative. So.